And TA means technical analysis. Sorry if I wasn't clear. It's basically analyzing trend, sequences, and information to get a mathematical way of understanding what is the possibility of achieving this. What is the possibility of price going from this level to this level? Okay. Now, let's look at, everyone knows gold. Let's look at gold. Okay, chart on it. Let me just delete everything on this one. Remove all drawings. Let's get rid of everything. The way to look at TA is you start from higher timeframes. Like Tempos did, same thing. You understand, look at TA by understanding higher timeframes. And through that, trading, first and foremost, is about making money. Okay? That goes without saying. Everyone wants to make money. Best way to make money is to understand TA and how and where to enter trades, meaning where to go long or buy stock, or where to sell stock or short. Right? You can make money both ways. So first and foremost, looking at gold. Right? Everyone knows about gold. People go long on gold as a thing. It happens to everyone all around the world. Gold, as you can see, has been going up. Right? Red is selling, people selling is red candle. Green is people buying. Okay? But in trading, in sells and buys and sells, there is both sides. For every buy, there will be a sell. For every sell, there will be a buy. Because someone has to buy, someone sell. Right? So the printing is done at closes. So you see a green candle, but doesn't necessarily mean it's people buying. It means that it printed green. It actually closed quite bullish. Bullish is a term used when you have a trend up. Bearish is a term used when you have a trend down. Okay. Now, looking at this, just looking at gold, as you can see from 20 odd years ago, since 2001, it has been slowly but surely climbing up until it goes to this level. Okay? This is a level. Level is a zone in price where people buy. Someone bought 1500 gold here, or sell. Someone sold 1500 gold here. This is per ounce. Okay? So, at this level, this is the level we've held, meaning this is the level people were interested in buying for so long here. And then after we break it, what happens? There is a shift in what we call trend. Bullish, and we have a short-term pullback. And in smaller time frames, you can even count that as a bearish trend. Okay? The higher the time frame, the bigger the sequence. The smaller the time frame, the smaller the sequence. Okay. Now looking at this chart as a whole, just looking at this chart, you can understand where people bought and sold, where people were interested in buying and selling. And this is where making money comes into play, is because if you are buying at levels, at places where others are buying as well, what that means is you get a price increase. But if you're buying at places where others people are actually interested in selling, then what you get is you are buying at places where people sell off to. So you're buying at these levels. So what we look at is what we call support and resistance. Support is a level of people where people were interested in buying, and resistance is a level where people are interested in selling, or what we call covering. Covering is basically doing the opposite of buying. In this case, if you are long, you are covering to short, sell. If you are short, you are covering to buy. Okay. The covering basically means you are being risk adverse and doing the opposite of what you did before. So long to shorts. I know it gets a little bit technical, but this is where the little proof is in the pudding. So when you're looking at levels, you go, now you have understood that we have broken below this level here. Okay. In the smaller time frame, we have a very easy sequence as well. We have a sell-off, so people start selling this, and then people are actually interested and buying at these levels. And this is what we call a pivot. These levels and these sequences happen all the time in any time frame in BTC, and I'll just give you a couple examples. And these sequences is where you are most liable to make some money. And why is that? Is for a simple reason. Okay, because now you have a trend, and that is going up, right? It's a trend that is going up. What happens if you break it? You do not want to be holding this gold, right? You want to be selling it before they break it, because the price is going to go down. So you are looking at where should you buy to uphold the trend. Where should you buy this gold so as to make sure the trend is still up, and you're buying it to make sure that you are going to be profitable because you are working with trend. You are trading with trend. Thus, you look at these levels and what we call swings, and you put your entry at higher lows, which means it's a higher level than this low here. This is the low, and this is higher than that. So thus becoming a higher low, and this is your long. And most generally, the way you want to be trading is you want to be risk adverse. So that means having stop losses. So entry with a stop loss here and targeting to the top side. Entering on this ticker here, targeting top side. Most of you, if you are been trading for a while or a couple of months, this might be completely obvious, but I want to just start with something really new and really newbie friendly. And everyone's heard of gold, so it just makes complete sense.